Hey guys, AKIL'S here. Welcome back to another trading video. Today I'm going to share with you a trading opportunity that's on my radar and talk to you a little bit about. I say alternative markets not necessarily because they're alternative to the norm, right? Depending on what market you're at, but they're alternative to the view that many traders have. See, one of the assumptions that many newer traders have, including myself when I first got into the industry, was that we have to follow the trend, right? That's the whole the trend is your friend type of thing, which does play a role in the market, specifically if you're trading certain indexes or the stock market and you're more of a longer term trader or investor versus kind of like an active trader. But in other markets, such as the foreign exchange market, the Forex market, and kind of crypto is leaning that way as well, we're seeing more and more consolidative times in the market. And specifically in the last 2 weeks, the volatility has been sucked out of the market. Movement has been minimum, and we've seen a lot of funky type of setups where my good old partner Jason Greystone calls it the wounded crab, where price action is going left and right like this. This is probably a bad thing to do on video when all of you guys see me, but it's too late now. Anyway, this type of movement causes problems. Not only do you look like an idiot going like that, but it also causes a lot of trading mistakes because traders want to trade. And when traders don't have trading opportunities, we become impatient and we start to force things, right? Try it out. Look at a chart for a long enough period of time, and I bet you can convince yourself to do something. And this is exactly what many traders do. And they try to find opportunities that don't actually exist. They're bad trades, they lose money, and instead of kind of waiting out a period for that best trading opportunity to come, they're recklessly throwing money at the market, and by the time their good trades come, they're just digging themselves out of a hole. So we always want to avoid deviating from our plan, but that doesn't mean that we can't add things to our trading plans, meaning alternative strategies. My story was a little bit of the opposite, right? I started off as a counter trend trader, and then I was getting hammered in the month of September specifically because that used to be a very directional month. And I decided to add more trend following strategies to my arsenal to kind of even things out and give me more opportunities instead of sitting there and making mistakes. And that's what I want to show you today. We're going to see a opportunity here on Bitcoin where the market has literally been this for the last few months or so. And from the outside looking in, it probably looks like a piece of crap, like you can't do anything with it. But if you have a strategy that is centered around counter trend and consolidative trading, then you can actually see hidden opportunities that will allow you to profit even when the markets aren't at their best. Let's hop in. So we're here on the daily chart of Bitcoin, and as you can see, for pretty much the entirety of 2024, March or whatever like that, we've been doing the sideways shuffle, the good old wounded crab. And from an outside perspective looking in, it looks very difficult to navigate this chart. However, if you know what you're looking for, you can find plenty of opportunities on here. And an opportunity I want to share with you today is going to be in the form of an advanced pattern formation or a harmonic pattern formation, and specifically one called the Gartley. Now, it's important to understand this, right? Like many things in trading, there's not one way to trade this. There are different ways depending on who you learn from. So what I'm going to show you today is just a way that I specifically traded, a way that I was specifically taught. It may not line up with another video that you saw out there. And as someone who is maybe interested in this style of trading, what's best is that you kind of look at both perspectives, look at different educators out there, different ways of trading it, and see which one makes the best sense to you. Mine is really rules-based when it comes to the Fibonacci's. That way it keeps me out of trouble. But if you want something more loosey-goosey, you may want to try an alternative approach. I've seen a few different things out there, excuse me. But an advanced pattern formation is, in general, or harmonic pattern formation, there's plenty of them, right? There's Gartleys, there's bats, there's ciphers, there's butterflies, there's crabs, there's sharks, right? All types of different animals. The one that we're going to focus on today is going to be a Gartley, and it's going to be a multi-leg move that happens during periods of consolidation. Now, this is actually caused by big banks and their movement and all this fun stuff, but just to keep things kind of simple as possible, I'm just going to show you what it looks like and how to draw it out. So we always start with a starting point. In this case, our starting point is going to be right up here. This is going to be called our X leg. X marks the spot. And this swing high to swing low is going to be my X to A. Now this swing high to swing low could be something called an impulse leg. It could be an anchor leg. Again, try to keep things as simple as possible. What we want to look for is a sore thumb move, right? So remember those cartoons, Tom and Jerry, where, you know, they hit the thumb with the mallet and that thumb blows up big and red, right? It sticks out. That is a sore thumb move. So in this case, a swing high to a swing low that just stands out, pops out to you on the chart. And I think, I don't want to say all traders, but maybe 90 out of 100 traders can agree that this swing high to swing low stands out. Now, this isn't going to be the cleanest Gartley pattern in the world, and this is where some of the discretion comes with advanced pattern formations or price action trading in general. Some people require a really smooth and clean move for their different legs in between. Some don't mind a little complex pullbacks, little extensions and stuff like that inside of it. For this one specifically, this is going to be more of a complex pullback. So the market goes from our swing low of A right here up to there. Then we actually retrace a little bit within there and then extend within the retracement here, giving us a complex pullback that looks like this. And this is going to be our B leg. Now, depending on where our B leg forms, that's how we determine what type of advanced pattern formation it is. So what I want to do is I want to take my Fibonacci retracement tool. I want to drag it from my high of my X. I'm going to move this out the way just so I can kind of see it correctly. The high of my X right here to the low of my A right there, that swing high to swing low. And I want to see what Fibonacci level that B leg comes to. If it comes to a 3D2, I'm looking for a very specific thing. If it comes to a 50%, I'm looking for a very specific thing. If it comes to a 618, I'm looking for a very specific thing. If it touches the 786 at this B point, I'm looking for a very specific thing. So we have rules that are Fibonacci based, and based off of which zone we complete in, that allows us to determine what pattern we're looking for. So in this one, the B leg comes past the 618, but it does not hit the 786, which puts me on alert for a Gartley pattern. Now, I mentioned earlier there's a few ways to look at this depending on who you're learning from. One way will tell you that the 786 is going to be our D completion. We'll just skip over D, right? C leg is right here. Sorry, blah, blah. Doesn't go below A. We don't really talk about the C leg too much, but doesn't go below A, so it's fine. With our D completion, right? Some will tell you that, hey, that 786 is the D completion point no matter what in the Gartley pattern. And if you're someone that subscribes to that, then it's important to understand that this move has already been made. Why? Because price action has come to the 786 and it's already retraced to your would-be target. So you never want to get involved in a trade for a second time after what you already expected happened. If you're someone that does not subscribe to that way of trading to Gartley, what you're looking for is this. I'm going to take my Fibonacci extension tool this time, and I'm going to drag it from the low of my A to the high of my B. And you can see the pattern here of dragging it from swing high to swing lows and swing low to swing highs, right? For you guys that are on the Tier 1 trading platform, this is why we spend so much time in the first two courses, Foundation 1 and Foundation 2, talking about training your eyes to read the ebbs and flows in the market, training your eyes to read extensions and pullbacks. Because if you cannot properly read extensions and pullbacks, there's a whole bunch of problems that come with that. But for advanced pattern trading specifically, you're going to have a really hard time identifying legs. You're going to have a really hard time drawing Fibonacci's from the correct swing points. So with a Fibonacci extension taken from the swing low of A to the swing high of B, what I'm looking for is a completion point at my 127 Fibonacci extension, and that completion point is going to go to the high of my X leg. So because we came so close to our 786 on this B leg, that gives me a really deep completion point for this Gartley. And deep is good because it's going to give me an incredible risk reward and the ability to be a little bit flexible, which I'll show you in a bit. So just to draw this out, we're looking for a pattern that looks like this: X to A to B, B to C, and a CD completion projected right here. Now, we spoke about consolidativeness here on Bitcoin, and you can see that we're in an interesting zone, right? Be ready for a lot of lines here, right? We have our X leg, which is a level of structure right there. However, we have multiple overlapping levels of structure as well. One right here, and one right here. And one of the warnings that I give to traders is that when you have over or underlapping levels of structure, be aware, because typically the ones that are further away are the most important, meaning these act as like trap areas where the market knows that traders like to hide silly stops in those silly areas, and the market likes to go up there and grab them and laugh in those traders' faces as it's going in the opposite direction. So if you can be in a safer position, that's the better place to be in. However, if you're looking at traditional stops for this Gartley pattern, it's not necessarily going to put you in a safe position. I'm not going to go calculate the ATR. I'm going to use my shortcut, which is taking my Fibonacci extension, inverting it backwards from A to X, and using that 113, which like 95% of the time puts me in the same area as an ATR-based stop. So you can see that our stop loss for this pattern is going to be right about here. Let me see if I can label this stop loss, if you guys can see it amongst the line, right? And our targets, right, if we're using a traditional 3D2 Fibonacci retracement for the target area, is going to be right here. So this gives us a risk profile that looks like this. And again, you're going to be happy with the risk profile because this is such a deep Gartley that our reward is going to be big and our stop is going to be small, right? But the problem here is our stop necessarily in a safe place? And that's kind of a balance that you have to kind of work out as a trader. Do I want a bigger risk reward? Do I want to have more safety with stops, right? That's, again, there's no one set answer for that. That's going to be you and understanding yourself as a trader. Now, the fact that this Gartley is so deep, here's the cool flexibility that it gives us. If you're someone that wants to, and more importantly, are allowed to adjust your stop losses, check this out. Our entry is going to be the same. Our exit is going to be the same at the 3D2. But if you're allowed to adjust your stop loss, because this was such a deep decompletion, you still have the ability to get it above all of those danger zones and still have a quality risk reward. Yeah, you're not getting the 2.5 to 1 like you did on the original one, but you're still getting over a 1 to 1, plus you have that added safety, plus you have the ability to actively manage your trade on the way down if price gives you clues that it's working in your favor. So I thought this was a cool opportunity, not only an opportunity to trade within kind of a period of nasty, disgusting looking consolidation. And trust me when I say this stuff happens all over the place. I've been trading advanced patterns since what? I got into Forex in 2009, probably about 2010, 11. Probably 11 is when I first started going into advanced pattern formations, and it's been a staple in my trading ever since. I can tell you that I'm bored with them, and I don't mean that in a negative way, but I've been doing it so long. They work on autopilot, they pop up. It's pretty simple. They're not really fun for me anymore, but again, trading isn't about fun. It's about making money, baby, right? So that's, and they work on a consistent basis with that. So it gives you the ability to trade and look for something within periods of consolidation, which shouldn't really conflict with any type of trend trading strategies that you have. And I want to do this video because it also shows kind of the opportunities that come when you have the ability to like adjust and adapt and, you know, take something that is rules based, and over time as you grow as a trader, allow yourself little outs and adjustments to kind of, you know, take the very specific circumstance into account, if that makes sense. Hope you guys enjoyed the video. Subscribe if you're new. Remember, free online trading workshop coming end of November. I will get you dates and details as soon as we have it, but mark your calendars now. It's going to be our year-ending event. It's going to be amazing. It's free. You're going to learn a lot. So pay attention to this space and you will find out all of the details you need about how to get involved and show up. Until next time, plan your trades, trade your plan. Take care. If you have any comments or questions, leave them below. And I wish you guys a great rest of your trading week. See ya.
I wanna be the best in the game, invest in my name, check no restraints, I'm obsessed with the pain, I ingest, I retain, assess and I change, possessed by the thought I'll be free one day from society's restraints, money, clout and fame, mud, disease, a plague, we all love to hate, have to play the game, have to make a name, all our insecurities are on display.